What's up, guys? Awesome week in the room. We had a lot of new members, which was fantastic to see. Pretty good week to be in the room. There was a lot of action, a lot of fantastic news. As you guys know, we have some of the top news guys, probably the top news guys in the industry in the room. Very, very fast at breaking news. Usually, 30 seconds, a minute, sometimes a couple minutes before a lot of the big news services. So that's always really, really helpful to be ahead of the street for the most part. So as you guys know, seconds count. And when you're 20, 30, 60 seconds ahead, it always makes for a nice trade. So a couple things to just check out today. We did a little bit of a recap of the week, some of the good stuff, some of even a couple stop outs that I was really happy about. The way that I trade is I start in relatively small. I'm not always trading size. I'm not always looking to kill it. There's only certain setups that should have size put on. There's only certain volume, liquidity, range type names where you actually have that edge and you can exhibit more risk than you normally would. The biggest problem that a lot of people try to do is just kind of size up on everything, and that's just not the way to go about doing business. It's a great way to get in trouble. You need to continually test liquidity, especially if you're trading a little bit more size, to just kind of make sure that you're able to get in and out. And a lot of times you'll start to realize that some of the key points that you thought should break, if you're there and you're trying to cover, you start to get a little bit of information. For example, EROS this week, I had put in some covers at a particular level, and it came right to me. And typically I'm pretty good at kind of anticipating where it's going to wash to. And it came right to my bid and just kind of rebounded. And to me, that's a sign of a lack of liquidity on the bid side. So it means that I'm probably early on the trade, especially if I'm looking to short. So that's why I was super, super cautious until the 380s, when it started to really start to speed up versus the prior price action. So it's very important. And like I said, it's not every single trade is going to provide a sizable trade. And a lot of people get used to trading a particular size on a particular day and then try to do it the next day, the next day, the next day. But you can't do that. It has to be surrounding that volume, surrounding that spot where you have the edge. Usually you have a really big volume day and you have a couple days that surround that. But if you're continually trying to push that same size, it's just going to be one trader, one candle, one anything. It's going to knock you out. So typically when I exhibit a little bit more size on an A+ type setup, all the news is already out. Usually it's responding to either some type of headline, PR, or there's a earnings or something like that. So for the most part, it's obviously not guaranteed, but for the most part, most of the headline risk has already passed. So the biggest thing is, once you're on the right side of the trade, you don't want to turn it into a loser, which you'll see on one of the ones that we are recapping. And then also, if you start into something and you have a game plan, you want to let this thing work, but it starts to go this way when you wanted it to go down, get out, because it's occupying headspace, and you only have so much headspace. So it better be paying you rent, as that saying goes, to be in your head. Otherwise, kick it off. So I think that's really an important thing, and you'll see that home was the example where I was on that one. EMPH this week as well. There was a couple opportunities where I nailed a great entry, started to scale in, and thought that, hey, maybe this thing would unwind. But no, it stayed stronger than I thought. So I went ahead and just kicked it off, moved on, and I used that energy, that headspace, and the ability to put on a new position on something else that actually was working. And when stocks start to work, they require less energy because you let them do the work rather than you pushing all the buttons and trying to force trades here and there. So and especially in this market, what's great about it is when you're right, you're really right. So these things trend, not just one candle. Everybody is so focused on the micro move, and I would encourage people to look at the macro where could this be at the end of the day? Where could if it breaks this key level, where is it potentially going to unwind to, or where would it break out to? And if you focus on those days, you're actually going to have more edge, and you're going to enjoy probably trading more, to be honest, because if you're always trying to just do that micro trade, you're going to drive yourself insane. So going towards some of these recaps, CRC, MDR. These may not be for everybody, but I would encourage you to take a look at these different styles of trades. And I'm always adapting and always trying new things. But just because it works for somebody else, it may not work for you. So I had a close friend here in the office, and he's learning to trade and grinding along and kind of figuring things out. But he's actually been mentored by another friend of mine who is an amazing trader. But it just is not clicking as well as it does for the other trader in his head. And that's okay. But you need to explore, what are you good at as a trader? What makes sense to you? What do you feel comfortable trading? And how do you not necessarily perfect it, but how do you make it better and better and better? So you take a little bit from everybody and you figure out what you are best at, and then you become a better you each day. Because if you try to mimic someone just because it worked for them, does not mean it's going to fit with your personality either. Somebody like me, where AIM this week, I shorted the open and I literally covered at 359. Now, for a lot of people, that's way too long. But you know what? If you're on the right side, you can let it work, and it's not occupying any headspace. A good average, let it work. But for somebody building an account, it might be better for them to go ahead and lock that in. So it's a reminder that what works for somebody else may not work for you. But take a little bit from everybody and then mold it into your own strategy. And that's the best thing that you can do, because you're going to find out over time what is best for you. And that could be stress related, that could be emotions related. There's fantastic trades every single day. There's huge momentum type trades, but stress related and emotionally, I don't really care to get involved in a lot of size. A lot of these momentum trades, for example, I try not to get involved over 10,000 shares. The ones that are going up 200% per day, things like that, because I know it's only going to be one that I get stuck on the wrong side of 30 or 40,000 shares, and then it goes a couple points against me. And I remember why I don't trade size on these things. So always mold, always try to figure out how you can make yourself a better you than the day before. And so with that said, the MDR and the CRC trade that I have on the recap, I think it's really important and good to see that a lot of people ignore these trades. A lot of people will not chase a stock down, already down $1.20. But depending on the type of market, depending on what's happening, you might still have another $1 or $2 or $3 or $4. And so we had that this week. And MDR, it all starts with a little dabble. And I saw it. There was a continual seller, and I started to scale in and add to the winner. As I got further away from my average, which was about 460, then 450s, then 420s, you don't want to add too much too soon, because you always have to have wiggle room in the event that it kind of flushes out and comes back up a little bit. You always want to give yourself that buffer. So if you're ever getting too much size with only a little bit of buffer room, you should probably size down, in my opinion. So I always kind of recheck my we talk about the dial a lot, but you should always recheck where you're at on that dial. Do I have too much risk for what I thought was going to happen, or is everything good? And MDR was one of those situations where every ad was met with another dime pullback, another dime pullback, another dime pullback. So you were able to size and keep that wiggle room massive, because you're getting further and further and further away from your average position despite sizing in. So it worked out really, really well. And because of that, ended up getting a really, really nice washout. And sure, I covered too soon. I got back in there a little bit, and I also traded the bounce. But Because of that initial position, just a little dabble, and then scale, 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 scale. Because of that initial entry, I was able to get that nice unwind. And the following day, CRC, because it's in people's heads, holy crap, did you just see what happened to MDR? Well, everybody's going to be kind of thinking about that as CRC starts to get oddly heavy, the offers start to stack, and it starts to stay really, really, really heavy. So it gave a fantastic opportunity. It was already down a lot, but I looked at it and I was like, you know what? There's a good chance that if this thing unwinds, if it breaks, if it starts to get a little bit of panic, we're going down $2 or $3. And my risk, say it snaps back, is 50 cents. So as long as I'm sizing in based off of 50 cents rebound real fast, then I'm good. Because in my head, I'm not emotionally involved even if it goes up 50 cents because I'm already factoring that into my size. I'm sizing in based on the fact that I'm assuming it's going to swipe up. And if it does, I'm good with it. If it starts to base at that 50 cent level higher and start to grind up, then obviously I would stop out. And remember, I'm also not going to have size at that point because I just dabbled in. And then dabble, 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 add to the winner as the trade progresses. So you'll see that here as well. And then being able to kind of anticipate range. If this breaks, what are the key? Where could this go? And that we call, kind of anticipating range. But a lot of times you'll have a huge washout and then snaps right back. So it's good to have wish orders out there. And wish orders are essentially just where you wish to fill in the event that it flushed. So I'd encourage you guys to go ahead and check through these chat logs, check the recaps, check the types of trades. You'll also see EROS, which was, it's a really beaten down company. There's a lot of great research basically saying why it should be a zero. But regardless, when there's volume, when there's range, when there's action, there becomes opportunity. So as the stock had squeezed out on Thursday, it also came down the next day. And it gapped down. The goal was basically 320, starts to kind of form a base and potentially come back red to green, which is a trade I love. Formed a perfect ABCD setup. Got long, essentially risking 5 cents, and it had a 50, 60, 70 move up. So we recapped that as well. I'm sure a lot of you guys saw that on Twitter. But that's it for me. Enjoy the recap. If you guys have any questions, please reach out, do a comment below. We're more than happy to get back to you, and we love any comments that you guys leave. So have a great weekend, guys.